Let's start with the chart pattern because, honestly, it's textbook. JASMY has formed what's called a descending triangle. You've got a series of lower highs creating a downsloping resistance line, and you've got support holding at specific price levels. As price gets lower, the triangle gets tighter. You're compressing price action into a smaller and smaller zone. Eventually, price has to break. It can't stay compressed forever, and we're at the apex right now. The triangle is as tight as it's going to get. One more test of support, and the zone becomes even narrower. Here's why this matters. Descending triangles are considered bearish patterns. The majority of the time, they resolve downward. Price breaks below support and drops. That's the statistical reality. But every pattern has breakout potential. Sometimes price breaks up from these triangles, and when it does, those breakouts tend to be explosive because everyone expected a breakdown. That's the tension in the chart. Right now, the pattern says breakdown is likely, but price just broke above the channel, so we've got competing signals. One signal says sell, another says buy. Understanding which signal is real is the job. Price action near the apex means we're in the most volatile part of the setup. A small move breaks one way or the other. There's no middle ground. The next 24 to 48 hours will determine which direction this resolves. JASMY briefly surged above 0.0060. That's above the immediate resistance. That's a breakout. But, and this is critical, the price immediately faced selling pressure. It didn't hold above 0.0060. It came back down. Now it's testing the lower support zone around 0.0055. This is the retest. This is where the setup either confirms or fails. Most retail traders don't understand the retest principle, so they get destroyed chasing breakouts. Here's how it actually works. A breakout happens. Price breaks above resistance. Everyone sees it on the chart. Everyone gets excited. Everyone chases. FOMO kicks in. Bids get placed. Volume spikes. The move accelerates. But here's what's actually happening underneath. Institutions and smart money traders who were positioned before the breakout are now selling. They accumulated at lower prices. The breakout confirms their thesis. So they take profits. They sell into the excitement. They dump on the retail traders chasing the breakout. Price comes back down. It retests the broken resistance level, which is now acting as support. If that retest holds, if price bounces off the old resistance, then the breakout is confirmed. The institutions filled their orders. The weak hands got shaken out. The actual trend is up. If the retest fails, if price breaks below the old resistance, then the breakout was a trap. It was institutions dumping on retail excitement. The actual trend is down. With JASMY, the breakout happened. Price went above 0.0060. But the retest is happening right now. Price is testing the 0.0060 level again. Is it going to hold? Is it going to bounce and continue up, or is it going to break and plummet? That's the critical question. That's where you get your signal. Here's the recommendation. Don't buy the breakout at 0.0060. Wait for the retest. If price bounces off 0.0060 and starts building higher lows, then you buy. That's your confirmation. That's your signal. That's when the risk-reward ratio actually makes sense. The reason this matters is because the downside is defined. If the retest fails and price breaks below support, you know exactly where the stop loss goes. It's just below the retest level. The risk is small. The potential reward is multiple dollars higher. That's a favorable risk-reward ratio. If you bought the breakout at 0.0060 without waiting for the retest, your stop loss would have to be even higher, above the resistance that just broke. Your risk is bigger. Your potential reward is the same. That's a bad risk-reward ratio. The retest is where smart traders enter, not during the breakout, during the retest. This is crucial. Let's assume the retest does hold. Let's assume price bounces at 0.0060 and starts moving higher. Where are we targeting? There are 4 price targets stacked above. First target, 0.00634. This is the first level of resistance above the breakout point. If JASMY bounces and holds above 0.0060, this becomes the next test. It's a reasonable take-profit target for early position takers. You're looking at roughly 5 to 6% gains from the 0.0060 retest level. That's not explosive, but it's solid. It's the conservative target. Some traders take profits here and move on. Second target, 0.00691. Now we're getting into the meat of the move. from 0.0060 to 0.00691 is roughly 15% upside. This target assumes the first level holds and price builds momentum. At this level, you're seeing real conviction from buyers. This is where swing traders are looking to exit half their position. You're taking some profits while keeping skin in the game for the bigger targets. Third target, 0.00748. This target is about 25% above the retest level. At this price, the move is confirmed. The breakout is real. The pattern is working. This is where position traders are starting to take profits. But this is also where the move becomes extended. Buying at 0.0060 and targeting 0.00748 means you're up 25%. That's a significant move. You should be scaling out here, taking profits, protecting gains. Fourth target, 0.00830. This is the home run target. From 0.0060 to 0.00830 is roughly 38% upside. This assumes everything works perfectly. The retest holds. Price rallies without any major pullbacks. Buyers stay aggressive. No external FUD. This is where you're only holding the smallest portion of your position, the part you're willing to give back if the move fails. Notice the progression. The targets get progressively further apart and progressively more aggressive. That tells you something important. The first target is likely, the second target is probable, the third target is possible. The fourth target requires things to go perfectly. You should structure your position accordingly. Maybe 40% of your position you're exiting at the first target, another 30% at the second target, another 20% at the third target, and only 10% you're holding for the home run fourth target. That's disciplined profit taking. That's how you lock in gains instead of giving them back. Now let's look at the other side. What if the retest fails? What if price breaks below 0.0060 and the descending triangle completes bearishly? There are two support levels underneath. First support, 0.00487. If the retest fails and price starts falling, the first place it's going to test is 0.00487. This level held previously, it's established support. Bouncing here would give bulls a second chance to push back up. Missing this level and price would fall further. Second support, 0.00456. Below 0.00487, the next support comes in at 0.00456. This is where serious breakdown would matter. If price crashes through 0.00487 and tests 0.00456, that's a 10% drop from the retest level at 0.0060. Now here's the key. The expert analysis calls this scenario a roughly 10% loss opportunity with a 3-to-1 risk-reward ratio. What that means is, you risk a small amount to make 3 times that amount. For example, you buy 100 coins at 0.0060. You set your stop loss at 0.0061, just above the retest level. Your risk per coin is 0.0001. That's 0.01 total. Your profit target is 0.00830, the top target. That's a 0.0023 move. That's 0.23 total profit. 0.23 divided by 0.01 equals a 3-to-1 risk-reward ratio. You're risking 0.01 to make 0.23. That's a favorable setup. Even if you're right only 30% of the time, you make money over the long term. This is why the setup matters. The downside is defined and relatively small. The upside is larger. That asymmetry is what makes the trade worth taking. If you're understanding technical analysis, if you're learning to identify setups with good risk-reward ratios, you need to like this video right now. One click, huge help to the algorithm, and it reaches more traders who want to learn proper position sizing and risk management instead of just chasing hype. Plus, share this video with other JASMY holders. They need to understand this retest principle before they panic buy or panic sell based on the breakout. They need to see the levels that matter and how to structure trades properly. Let me break down the retest principle one more time because it's honestly the most important concept for this setup. When a breakout happens, it attracts attention. Price goes above previous resistance. Traders notice. Retail traders buy. Momentum ignites. Volume spikes. Everything looks perfect. This is when FOMO, or fear of missing out, really peaks. But here's what's actually happening. The traders who knew about this breakout before it happened, the ones who accumulated weeks ago when price was lower, they're selling now. They're cashing out. They're taking the profits that retail traders are just starting to see. Price starts to fall from the initial spike, it comes back down, it retests the breakout level. This is the retest. This is the moment of truth. If the retest is strong, if price bounces off the level with good volume and starts building higher lows, it means the smart money bought the dip. It means institutions are accumulating more. It means the breakout is real. If the retest is weak, if price breaks through without much volume and keeps falling, it means smart money isn't defending the level. It means the breakout was a trap. It means the move fails. With JASMY, we're at that retest moment. This is where everything gets decided. The next 24 to 48 hours determine the entire narrative. Do not buy the breakout. Wait for the retest. That's the cardinal rule. The retest is where professional traders enter. The breakout is where retail traders get trapped. The analysis says, consider buying a small position only if the channel is successfully retested. That word, small, is doing a lot of work here. This is not a position you go all in on. This is not a position you risk your entire account on. This is a calculated trade with known risk. Here's how you size it. First, decide your total risk. Maybe you're comfortable risking 2% of your account on this trade. Calculate how much that is. Second, identify your stop loss level. With JASMY, if you're buying at 0.0060, your stop loss is just below that level at 0.0055, the support that's being tested. Your risk per coin is the difference. Third, divide your total risk by the risk per coin. That's your position size. For example, if your account is $5,000 and you risk 2%, that's $100. If your risk per coin is 0.0005, you can buy 200,000 coins. That's your position size. This way, if the trade fails and you get stopped out, you lose exactly $100. You're protected, your capital survives to trade again. The upside? If you hit that third target at 0.00748, you're up $338 on a $100 risk. That's a 3.38 times return. That's honestly life-changing on a small account over time. This is disciplined trading. This is how professionals think about risk. Not how much money can I make, but how much money can I afford to lose and still survive to trade again. Thank you for watching this technical breakdown. JASMY is sitting at one of those inflection points where the next move determines everything. The retest is the signal, the levels are defined, the risk-reward is favorable. Whether this breaks up to 0.00830 or down to 0.00456, you now have a framework for understanding what's happening and how to position accordingly. If you want to stay updated on setups like this, if you want to know when coins are at their inflection points, when breakouts are setting up, when risk-reward ratios are favorable, stay subscribed. We're tracking technicals, identifying patterns, and breaking down the exact levels that matter before mainstream traders even notice. Check out the other videos on TJ Crypto World. We've got deep dives on chart patterns, risk management principles, position sizing strategies, and everything else you need to become a disciplined trader instead of a reactive, emotional trader. I appreciate you watching, I appreciate the community, and I'll see you in the next technical analysis.